All right, welcome back to the channel. Welcome to our first of many price action studies that we're going to be going over. This is not financial advice. Do your own due diligence. Do your own hindsight review of price action this week, and the coming weeks and so forth in your career. This is just a in-depth study and kind of breaking it down and annotating and ultimately kind of journaling the price action and kind of how I do it with the method I use to trade, which is the ICT, the concepts, the term that's been coined, the smart money concepts, how I use those and how I kind of frame price action using those. So let's dive into it. We have the 4 hour here. We're not going to use the market replay. We're just going to kind of just break down price. So actually, let's drop down to the hour here. We're going to get the new day open here for Friday. And we're going to mark it out with a vertical line. All right, see how we have the Friday midnight open. Okay, and then when I like to do at the midnight open, I like to get the midnight open price. And I like to draw it out in time. Boom. All right, so 100 hours is going to be midnight. Now just make sure it's accurate there. Boom. And next, as 8:30 comes, let me see, break down to the 15-minute. 8:30. Boom. Now we have the 8:30 open. Rename that. All right. And that's kind of how I start. Basically, I mark the day, get the midnight open, and then get the the 8:30 open price here. So to go into premium and discount a little bit here, anything above the midnight open or anything above this 8:30 open is going to be a premium here. If I like to use the midnight open as a reference point, just for the day's price action, and say and these are closely, you could refine an open here. If price would have dipped down here, that would have been a very deep discount. As the 8:30 opens below this midnight open, that's a deep discount. So anything below this is already in a discount. But say if this candle were traced down into here, that would have been a deeper discount. But going forward here, let's zoom back out to the 4 hour. So disregarding this wick from non-farm payroll. All right, on the 4 hour, we can see here that price action did. The range began to tighten. To disregard this wick here, very exaggerated move. That's sometimes seen with non-farm payroll, CPI or FOMC. But if we're just using the bodies of the candles, we can see that the range did tighten, which is a sign before expansion. So we got consolidation, and then the next phase of price action is going to be expansion. So looking back on some of the PD arrays that were here before we even came into 8:30 non-farm payroll, we had this 4 hour wick right here. If you draw, take from the high to the body of the candle, that median, it's called consequent encroachment. Look how price respects it, the bodies of the candles, very nicely. As soon as you come below it, boom, we saw the expansion there. All right. This last down close candle before the big move up, it's going to be considered an order block here. And I have some of the levels I like to see priced out for next week, but I won't dive too much into next week here. I want Monday and Tuesday to play out first before I kind of, at least Monday, just go before I kind of really make a bias. Drop down to the hour. We still have our reference points of the hour, the midnight open and the 8:30 open. So what happened is we had the range tighten up. We had this false opening high That was made during the London session, that 5 o'clock close there. London open, the end of the kill zone for the London open session from 2 to 5 a.m. Eastern time. And then a signature of the opening range high is going to be the aggressive trading away or the move away, right, as manipulation. So let me just mark this low right here. This run below these lows. Let me make that darker. This run below these lows here is going to be a stop hunt. And in the ICT, the order block theory here, this price level, 1697 and 3/4 of a point, is a daily order block on the bullish side, right? And you see the expansion, and that comes from that. Okay. Price explodes. So with 830 non-farm payroll, drops down into it and explodes out of it, right? Okay. And now if we go back into a 15-minute, or actually we can mark this last up close candle. So we had this low, high, lower, low. That's a breaker. That's going to be bullish. And so we like to draw that out in time for future reference for whenever price revisits it. So we could just call this an hourly breaker. I like to use the plus sign for bullish and the minus sign for bearish. So we have this hourly breaker. Now, again, disregard the whips because NQ, the wicks does do the damage. And this is why you need a stop loss that, lets your price move, especially with NQ. And, there's these wicks, especially with news drivers, any algorithmic signatures here. So again, the low to the high to the lower low, trading down into a PD array gives us the confirmation that this is a bullish move. This impulse price leg at 10 o'clock explodes up, breaking this short-term high. So this is still, again, this is kind of coupling a few things. Break of this high is going to be a market structure shift. Okay, I'd like to annotate that with like the little light bulb, gives you the idea. So as, again, it makes that opening range high, that's taken. We retrace back to the same breaker. That red line is going to be the mean threshold of that. And look how the candle body's respected. The wicks are going to do the damage. That's what's going to get you stopped out. But if you had your stop here below this low, you'd have been safe. Trades all the way back in between this gap, that 3 candle pattern. 1, 2, 3. There's a space here. Trades back to it. You could have been long here. We'll just needed your stop loss to be here, not in a rush to kind of move it up. And then as we drop, we sweep this low right here with the next candles open. And this, again, this is the hourly chart. Sweeps the low there, taps into this fair value gap. Last down close candles as well inside of this whole breaker here. So we have multiple PD arrays lining up to the buy side for higher prices. Drives up higher. Now what we're going to target, and this is the power hour setup here. This volume imbalance or this fair value gap right here on the hour. We have a volume imbalance. We have fair value gap where that we can aim for price to reach into. And if you can see here, as we cut through the candles, we can see how price respects this equally. All right, so let's drop down to the 15-minute and then refine it a little further. And so this price action now does get a bit hairy. I took a loss in here as well. And that's why I generally like to avoid non-farm payroll, but I like to use it as a good case study into studying what price action does, because you're going to get a lot of moves, a lot of PD arrays that are going to be set up inside of this that you can really study and then use in more calmer price action to study from and be able to frame setups there. So on the 15-minute time frame, all right, after marking up our hourly, okay, we see how we trade back into this, right? Trading below this low at noon, but back into this, again, a fair value gap, right? Drives back down into it on the hour, and then trades up and takes out that AM session high right there. Now, slightly going into next week here, I do think that we expand higher, just based off the projections from the framework of this breaker here. So you can project where price could go from this setup here. So we have this low, high, lower, low, even on the hour. Draw Fibonacci extension. We have buy side liquidity up here. If we zoom all the way out, that November high is up here, and it's very clean. And I think that we can probably get that taken out there. Now, how that we get there, that's kind of the case of the exact pattern. That would be like a day by day kind of thing, or especially after Monday's open, we'll be able to kind of predict or kind of anticipate what PD arrays will be respected and which ones, will be invalidated here. Let me just zoom out just a little bit here. I'm gonna take away some of these markings just because they're lower time frame, and I don't want to kind of skew the big picture here. But I want to go to the 4 hour and kind of talk about that a little bit. So to note, I have marked here the 16,165 level is for the daily range equilibrium. So premium and discount, again, going back to what we're saying. Above this level, market price is in a premium. Below this market price is a discount. So with the 830 move here, this is the 4 hour candle. So the 830 moves inside of this, goes into a discount and hits that PD ray, that discount PD ray. So that again validates the bullishness in the move on Friday, the expansion. And then it drives right up into an 80% level, which is in a premium, more of a deeper premium. So we came down, went to a discount, and then back into a premium, which is a bullish move. Going into discount and then moving into premium, that's just a bullish move. And same for selling. You're in a premium, so it would be up here, and there will be some form of PD ray that forms that we can look to aim to be below discount. And now, so how I said that this was let me just spin it out a little bit, the daily order block, that level, why it was so sensitive. I'm going to go to the daily here, and I'm kind of working a little backwards. I went from 4 hour to down, and then 4 hour to up. And so how I got that equilibrium, right, it's going to be from this high of November 29th down to this low from December 4th. And that midpoint is going to be equilibrium. Again, this last down close candle, just how we saw it up here, this bearish order or bullish order block on the 4 hour, this last down close candle on the day, look how we traded right to the body of the candle and then straight expansion. Okay, and then I think that this can continue to move possibly higher, right? We're right here at that 1.5 standard deviation. That's where the silver bullet can form, and then we could really wipe out these buy stops that are back here at the 16,406, or I'm sorry, 16,410. But for big figure, we could just call it 16,400. And now kind of shave off a little bit so you're not looking for absolute precision. Okay. Let's go into the weekly. So we can see the week that we had. We had this stop hunt, or let me just show you that there on the daily chart. This low that was here, price takes it out on Monday. That's sell side liquidity. Those stops that were being trailed up in this move takes them out, and then we expand back without them. On the weekly, we tapped into a weekly for a value gap, right? We expanded up, traded back down into it, and then we kept expanding. And then and then we have this old high here, and I would like to see this old high become support. Next week, if we can close above, if you have a day that we close above this, this old high will become support. And then we could possibly, expand further here in price action. But we'll see. Alrighty, so that wraps up the price action study here. I want to keep it kind of sweet and to the point and kind of just focusing on today's price action as a whole, or yesterday's price action as a whole. I want to drop more content in the Discord and on YouTube. And currently our Discord is free. I'll be posting all the links to all the socials. Feel free to join, learn. We have a lot of lives. I'm going to be publishing more videos. Some are going to be exclusive to the Discord for a while before putting them on YouTube. So go ahead and check us out. Good luck and good trading.